afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Markets give up early gains to trade with a negative bias. The Nifty is trading below the 11,900 mark. Banking stocks and broader markets are underperforming. Reliance Industries and Infosys are among the leading gainers in the Nifty. The two stocks are keeping the Nifty downside in check by contributing nearly 52 points to the upside right now. Britannia is the top gainer in the Nifty after its second quarter numbers. The stock has snapped the 6-day losing streak today. And Zee Entertainment is the top loser on the Nifty. Reports suggest that lenders have agreed to sell pledged shares of promoters to institutional investors via block deals. Good afternoon, Neeraj. Finally, some profit booking coming in for the banking stocks, but clear support from biggies like Reliance and Infosys today.
Yeah, a bit of a rotation, Navneet, you're right on the index per se, though banks taking a bit of a chipping off, really. No big profit booking, really, you would have to say, but just a bit of a chip off, really, for some of the banks, and which is why that index is down about 0.84%. And large contribution, or rather contributions from across. I mean, the Bank Nifty, we'll do the Bank Nifty MRR as well, but just first get the Nifty heat map up on the screen, because that will largely tell you the story of what's happened. And as you can see, I mean, there are individual culprits, the likes of Adani Port post results, Zee post that uptick on Monday, correcting a bit, Gale correcting about 3.5%, but Yes Bank down about 3.5%, SBI about a couple of percentage points. There is weaknesses, Axis Bank about 1.5% lower, HDFC and ICICI Bank 2 and IndusInd Bank. So across the board, you're seeing some pain points coming out. What's doing well though in the session is Britannia, and from the start of the trading day, it's been about 4.5 or 5%, so doing rather well for itself. TCS and Reliance 3% apiece, no apparent reason, so a bit of a rotation out there, and some gains for Nestle and Finserv. So those are a couple of others, but largely a couple of heavyweights doing okay and being bogged down by what's happening on the Nifty Bank. Broader markets, Devin, I believe not the most gung-ho today.
Well, not individual stocks again driving the moves on. Some of them. So we'll start off first with some stocks that are there in focus this afternoon. While the indices are down in the red, you've got Indian Hotels. Stock came in with results. The company came reported numbers above street expectations, and the stock's up about 5.5%. MGL, following suit with what its peers did, posted a decent quarter, strong margins due to higher than expected gross spreads, leading to the stock up about 6%. And Edelweiss, on the back of news that the PE firm Sanaka Capital, along with co-investors, will be investing $75 million. That stock's up about 5% and now at 122. A really good move in the last 1 month. Other stocks include the likes of Nestle Propack. It had a decent day on Monday. Today again is up about 7.5%. EID Parry, and not just EID Parry, the rest of the sugar pack last 2 days have been buzzing. EID is up about 18%, and RNAM is the other one, which is up about 9% Nippon Mutual Fund. Losers in trade today include the likes of a Dish TV. There's some give back in today's session, so stocks down about 8.5%. Just Dial, heavy on the institutional holding front. Stocks given up 7% in today's session. And Varun Beverages, after that really stellar run-up that the stock has seen post its quarterly performance and post the upgrades that reports brokerages have given it, is seeing some profit taking. Today is down about 5.5%. Volume buzzers, ICICI Securities trades with 26 times 20 days average. Raymond trades with 24 times the 20 days average. And then you've got a Sri Renuka, like I said, sugar stocks are buzzing. This one too with 86 times the last 20-day average. So all of these stocks are active in trade. But what else are we watching out for in terms of the futures and options space? Navneet is going to highlight that for us. Navneet.
Thanks for that, Davina. So far, the template has been there is buying coming in at lower levels, and especially around the mark of 11,850 to 900. Let's see today if we can close once again above the mark of 11,900. The last hour rally that was seen on Monday clearly showed that at lower levels there is some fresh buying. But as we speak, no major build-up coming up for Nifty futures. Bank Nifty futures, however, which closed at a discount on Monday, are now trading with a premium of 30 points, and I think today will be the first trading day since the time the series has started. We are not seeing any build up coming up for Bank Nifty. The open interest since the start of the series has actually gone up by 80 to 85%. India volatility index has been inching higher. I think it's cooled off a bit from the highs, at least. The 16.3 is where it currently trades. Important to note that what levels one can watch out for. On the downside, 11,850 will be a crucial support for this market, because we have been taking support around those levels for last 2 trading days. And of course, on the higher side, 12,000 continues to be a big resistance, as the maximum open interest on the call side still is at the 12,000 mark. In today's trading session, we have seen fresh put writing coming in at 11,900, which has added 13 lakh shares, whereas 11,950 and the 12,000 call strikes have also added somewhere between 11 to 15 lakh shares respectively. Quickly then on the stock futures front, Davina highlighted MGL. Of course, the volumes on the cash side are really on the higher side, but everything's going right for this company. Cash volumes high, as you can see on your screen, the white line indicating average versus the average volume of last 20 days. There's major build up on the stock future of Mahanagar Gas, telling you that there are long positions seen on the future side. Not only that, the high volumes, 32% of the traded quantity so far has been marked for delivery as per National Stock Exchange data. Sun TV is the other one, which is trading around 150-day moving average. Huge shorting seen post the numbers, and fresh buying continues for Amara Raja Battery for the second straight session. This stock has been doing well post its numbers.
All right, let's begin with the market voice then. Daljeet Singh Kohli of Valentis Advisors is joining us on the show this afternoon. Daljeet, thanks very much for taking on the time. How are you positioning yourself? I mean, you have seen a little bit of a risk-on play up until now, but not being able to really sustain that momentum. What is the advice?
Good afternoon. Yes, you are right that there is a lot of volatility these days we are witnessing. But I think the texture is very much intact, that probably market wants to move up. The good part from the results is that we are hearing good commentary. Now, last quarter numbers, the big problem was that whatever numbers were there, but management commentary was very weak. This time at least that is not the case. Most of the people are hopeful that second half will be better, and other boost has come from the tax saving. So although revenues have not come up, but at least profitability has moved. So we will see some earnings growth coming in this year for the full year. I think these things are keeping the market on the move, but the dampener is obviously the macro data. Macro data is really very bad. IIP numbers we have seen, expectation of a GDP number around 5 or less than 5. All those things are keeping a check on the market sentiment, as well as the overall view about the growth, as it's not very clear. But I think given whatever macro conditions are, market wants to move up, it appears, and most people are willing to take the risk. We are seeing broadening of rally, at least for last few months. There was only movement in the first 10 stocks. Now at least there is a movement in other stocks also. So I think it's coming back, and it's good for us. We have not changed our strategy. We were always positioned on high quality mid cap stocks, and that continues. So we are continuing with those that same strategy.
Okay. You said it looks like the market is in a mood to go up further from here. What will lead it further up from here? What has been doing and working well so far, which has been the top 10, top 15 stocks on the index? Or do you feel that that could possibly see some amount of a time correction, and therefore it's good enough to start adding a little bit of risk into the portfolio through mid caps and small caps?
See, I think it's not necessary that one has to happen at the cost of another. It can also be simultaneous, or it can be because of the base effect. First, see, there are a couple of factors in favor of broad market. One is that base effect itself is in their favor, because we have seen last 2 years no performance. So any small positive movement will lead to a big positive move on the stock prices, because people are under owning them. Second thing is the good thing which will come is, or the expectation, it is very reasonable to expect that if the government has done so much for the corporates on the corporate tax front, it is reasonable to assume that they will do something for the common public also in the budget. Now, it can happen before the budget also, but it is very reasonable to assume that something will happen in budget for the common man. You can't have a situation where you say that the country's top corporates I am willing to support, but I will not do anything for the general masses. It doesn't go politically, it doesn't sound so well, no? So we should, by sheer that logic, one should expect something will happen. There are talks about long-term gains, about dividend distribution, etc., whatever. So in those, that impetus can come from there. Second thing is monsoons this time have been very good. So which means that the second half crop pattern should be much better, and which will again see markets will always work on FY21. After 2 months we will start working on FY21, 22 numbers. So 20 is gone now. Now everybody understands 20 has been a washout year, it has been not so good. 20 itself will show on 19 earnings better because of the corporate tax benefit. But 21, 22 onwards we will start factoring in those better prospects, and I think that will help market move. So that these are the few things that make us believe that probably a broader market is in for better time ahead. Of course there will be dampeners, checks and balances because of this macro data.
Daljeet, good afternoon, Neeraj here. I just wonder, the one pocket that is dichotomous in its movement and its investor appetite is pharma. What's your sense here? Valuations optically might be compelling, but is there any kind of horizon of growth that you can envisage, and are you a buyer here?
Very selectively we are buyer, especially one thing is within pharma, MNC pharma is doing very well. So we have seen a lot of results which have come in both at the top line as well as at the bottom line. Bottom line obviously boosted by the tax benefit, but on the top line also there has been some positive movement. So MNC pharma is a clear good indicator, is showing good signs, and we are positive on that. Some of the stocks we hold also in our portfolio. On the other pharma, like big companies, Sun, Moopen, Cipla, etc., I think they are still struggling with the US FDA issues. Amongst them we like Moopen because I think the worst is probably in the stock price, and most of the facilities are already under problem. So anything better can happen is that even if one facility comes out of the issues, then you get that upside from there. So delta will be there in that company, and it is better to position yourself towards companies which are more inclined or which have a higher percentage share from domestic market. Domestic market again has been quite volatile. Month on month data from AIOCD is always very highly fluctuating, but still this quarter numbers have been good for domestic market. So I think guys who are positioned towards domestic market, they are also better placed. So there are some mid cap pharma there, some smaller companies which we are again positively inclined. One or two of them we hold in our portfolio.
Daljeet, besides pharma, you've got the FMCG pack, which is put up a better show, I would call it, in a challenging environment. We've seen companies like Godrej Consumer posting a volume growth of 7%, which is not, this number has not been seen by at least any other company. And Britannia reacting positively after its earnings today. What did you make of the numbers, A, and B, valuations for majority of these companies, be it Britannia or for that matter, HUL, Nestle, all have been trading at stratospheric valuations. Do you still feel that investors will continue to take refuge to these safe haven quality stocks?
Yes, I think the FMCG has been a standout sector in this quarterly numbers. Many people were not expecting good numbers or volume growth from them, but they have all shown very good growth, and from all of these companies they have shown good volume traction. So that has been a positive surprise, I would say, from Q2 numbers. Now valuations, of course, for all of these companies have been on a very high multiples, and they will probably remain like that because one thing is that this is a sector which every investor can easily relate. We can easily understand what we are consuming, what we are seeing our neighbors are consuming, our colleagues are consuming, so we can easily relate that, and therefore it is easy to understand that okay, 5% growth or 7% growth. Now statisticians or our analysts like us can crib it was 5.5% or just 5%, but generally speaking, when giving the overall environment, if these are the companies which are actually showing growth, and there is a visibility of numbers. So I think they will continue to command a high premium on their valuation multiple. I don't think that is going to go down very soon. So one has to take a call now. The way to play, how we are positioning ourselves in this sector is that we are looking, instead of going for staples or commonly traded FMCG or commonly invested FMCG, we are looking for some differentiated companies in this sector. So one of the companies that you talked today is witnessing a bit of profit booking. Now that is again FMCG company doing very good. They have shown a very strong set of numbers, but profit booking will keep coming. So that is a good time to look at those companies. Same way there is an apparel and over general, you can say a kind of a consumer store, departmental store kind of company, which owns a lot of big brands from a very big industrial house. So that again is showing same store sales growth of double digits. So those kind of companies we are positioning ourselves.
Got that. Daljeet, thanks very much for sharing those thoughts with us here on the platform. Appreciate you taking out the time this afternoon. Moving on to some earnings then, KEI Industries reported an 80% jump in profits due to lower taxes. However, margins were impacted due to higher depreciation and input costs. Let's discuss the quarter gone by with Anil Gupta. He's the CMD of the company. Mr. Gupta, thanks very much for taking out the time. Before I get into the details of the quarter gone by, I want to know from you, at the end of the first quarter, you had maintained a revenue growth guidance of 17 to 18% with an EBITDA margin guidance of 10.5 to 11%. Does that hold after quarter two?
So no, we had given a guidance of EBITDA of around 10.25 to 10.5%, and we have achieved around 10.28%. So far as top line guidance is concerned, we have exceeded that. Instead of 18%, we are able to reach 23.5% in first 6 months, first half of this year. So we have exceeded the performance in terms of net profit after tax due to higher turnover.
Okay, so will that affect the second half in a positive way, and will your full year guidance also get bumped up accordingly?
Our second half guidance will be almost of the same nature, around 18 to 20%. And we expect that in the full year period, we should be able to go between 18 to 20% on a full year period.
Okay, got that. So maintaining guidance, maybe it can even exceed it. So let's talk about the quarter gone by. Which segments did well for you? Let's talk about the institutional cable sales, domestic as well as export. How has it done, as well as the EPC business?
Mostly the growth has come from institutional cable sales and exports. Exports have grown by almost 90%, and institutional cable sales have grown by overall around 33%. EPC has grown by around 35%, but retail in first half growth is around 13%, but in Q2 it is around 4%. So overall, at the company level, we have grown by 23.5% in first half.
Okay, Mr. Gupta, I'm just taking forward the cable segment performance for you. Revenue growth of about 23%, volume growth of about 19%. And even if I look at the EBIT margins, you guys have managed to maintain the margins on year-on-year basis. Could you give us a sense as to what sort of value growth now one can expect? Are you looking at tinkering of prices? And also, is company facing any sort of cost pressures? If yes, how are you mitigating them?
No, we are not facing any cost pressure. Ultimately, whatever costs are, if the costs are rising, we are always, it is a pass-through to the customers. In the, except whatever orders are booked, beyond that, it is always a pass-through. The prices are reviewed every 15 days. And at the dealer level, list prices are also always reviewed every month. So there is no cost pressure, and we hope that due to our strong order book position of around 4,500 crore, we should not have any problem in meeting our targets of this financial year and having a strong carry forward order book to next year as well.
Okay, give us a sense on your working capital days. How did they pan out in quarter two?
There is a small increase in the working capital days in the second quarter because of the lot of dispatches took place in the end of the quarter, and we had to do reverse sale booking, so it could not be included in the turnover. But otherwise, our working capital cycle is intact, and we should be able to maintain the same working capital debt which was at the end of 2019.
All right. So just to follow up on that, and from FY18 to FY19, core working capital as a percentage of revenues came down from 34% to 32%. In FY20, do we see that improving further?
Yeah. Marginal improvement will come in the working capital side.
By how much? Could you give us a reference point, if at all, going by the way it's moving right now?
No, actually, I am not yet quantified on that, so I'll not be able to answer that question right at the moment.
Okay.
Okay, a word on your debt picture, sir. Your finance charges may have gone up on year-on-year basis when you look at the absolute number, but as a percentage of sales, I think there is a bit of correction there. Has the cost of borrowing for a company like yours after the rate cut that we've seen so far in this calendar year gone down? And give us a sense as to what is the exact debt on the books? How do you plan to reduce it?
You see, our cost of finance has gone down in the percentage terms. It is now gone down by almost 0.2%. Against 3.14% last year, it has gone down to 2.96% in the first half. But the debt is around 762 crore at the end of 30th September, which is slightly up compared to March 19 level. It is because of higher turnover and increase, but we should be able to maintain our debt within a limit of 700 to 750 crore as was 1 year earlier. But despite the fact that we have grown by almost 40% compared to that period.
And how much is short term in the 760 number that you've given for the total debt?
The working capital debt is around 550 crore, and the rest 200 crore is the term debt.
Okay.
Mr. Gupta, what about capacity utilization? Where is it currently, and would you over the course of the next 6 to 12 odd months look to add any kind of capacities?
We are operating at around 85% capacity utilization in our cables and around 68% in house wire. But we should be able to improve the capacity utilization in cables. However, house wire, there is still a gap. So we should be thinking of further capex in increasing our cable capacities in the next financial year.
But nothing as of now, because you're still far away from that nearly 90% mark in either of the segments.
Correct.
Okay, just one small other question, and added to improving capacity utilization as well as what analysts believed would be a rich product mix, that your margins would move up. Now my question is, over the last few years that I've seen the numbers, the margins I don't think have really gone up dramatically from this 10%, 10.5% mark. Would you believe there is scope for improvement, or would these be the steady state margins?
We will try to improve it, but at the moment our guidance will be of the similar nature. We should be able to, we'll definitely try to improve with our better product mix.
Okay, Mr. Gupta, just one last question. Of course, the bottom line has been boosted for a lot of companies because of the tax saving. Just want to get a sense, how do you plan to deploy the tax savings that you will be making because of lower effective tax rate now?
We are just waiting for the opportunity to grow in terms of our new capacities of the plant. But as of now, no concrete plans has been finalized. So we are in the process, and maybe by end of this financial year, we should be able to come out with some proposal for the capacity, new plant extension in the next financial year.
Okay, and revenue guidance of 17 to 20%, margins 10% for the year, that remains intact?
Yeah, we should be able to grow by around 15% in the next financial year as well.
Okay, Mr. Gupta, we leave it on that note. Thanks a lot for joining us and taking us through the takeaways of the quarter gone by for KEI Industries. Remember, majority of their revenues that comes from cable business, and they've stated they've managed to sustain the margins on year-on-year basis. But I guess the other segment, EPC, or for that matter, even the steel pipes business, that saw a bit of blip when it came to the margins. But that's the steel wire business that you can see on your screen. The stock's down about 1.5%. All right, staying on with the earnings and moving on to Aster DM's earnings for the September quarter. If you look at the numbers, the bottom line was dented owing to higher finance cost and depreciation, but it was an operationally strong quarter for the company, with margins too seeing a substantial expansion. Darshan Mehta caught up with the CMD Azad Moopen and began by asking him about the performance of the company's hospital business. Listen in.
Our overall India growth was quite good, and so if you look at the individual hospitals, the Aster Medcity, the Aster CMI, as well as even the Kannur hospital, which we started recently, these were all doing well. So that's why we could get a 34% growth in our India revenue in the quarter two.
So can you give us a perspective of how the Gulf operations panned out for you in the second quarter?
Sure. So the GCC hospitals did 15% and the GCC pharmacies 13% growth, whereas the clinics didn't grow. In fact, there was a minus 1% degrowth in the clinics. But overall, when you look at the India and GCC together, our overall growth is 14%. And the hospitals alone, when you look at it, is 22%.
Which are the hospitals that will operationally break even for you this year?
Yeah. So hospitals, very, very surprisingly, we started a hospital in Kannur, which is a 300-bed hospital. That went into a break-even within just 3-4 months, which must be a record anywhere if you look at. So that is something which we are very happy. And even the hospital in GCC, in the one Aster hospital in Gupta, that also has just going towards a break-even. So we have been able to ramp up quite fast, unlike earlier times, because of the brand's visibility as well as the overall the functional or the operational improvement.
Mr. Moopen, one concern that the investor community has is that there is lack of free cash flow generation. How do you look to address this issue, sir?
Yeah. So that's something which we are very actively looking at. And so what will have to be done is that what has been happening is we were investing a lot into CapEx, new facilities. So we are on the trying to bring it to a level. We won't be able to completely stop it. But when we look at our overall EBITDA and the free cash flow, we hope that by next financial year, we'll be able to have a free cash flow.
What has been the average length of stay and average revenue per operated bed for your hospitals on a consolidated basis?
Yeah. So the average length of stay is 3 days, and the average revenue per occupied bed ARPOB is around 28,000 in India. And it's very high in GCC because GCC has got a much higher, it's about 1.5 lakhs or 150,000.
Okay. Sir, can you share the outlook that you have for in the second half? How will second half be different from the first half?
Yeah, the second half usually is very good when compared to the first half. Traditionally, we were having a low season in the first half, which has been there for last many decades. So this is because of the situation in GCC. And the same trend is continuing when we look at October performance and all. We hope that we'll be in that same way. The second half of the year should be doing much better than the first half.
Okay. Okay, that's the management of Aster DM Healthcare commenting on their September quarter numbers. The stock's not doing too much, but remember, this has given you returns at least so far in this year. But moving on and talking about what the mutual funds have been doing, ICICI Prudential has increased stake in certain PSUs during the month of October. It has in fact reduced stake in some capital goods companies and equipment maker. Yash Upadhyay is here to take us through all the portfolio rejig. Yash, over to you.
Afternoon, Navneet. So there isn't actually a clear trend coming out, but a very stock selective month for ICICI Prudential. And I'll start first with companies wherein they have increased their holding, and Infosys, which was in news last month on account of the whistleblower report that cracked almost 10% that day. That is right at the top of their list. So they've bought in close to 2.5 crore shares in the company last month, along with the likes of Nalco, ITC, which came out with a decent set of numbers for the September quarter as well. Federal Bank is one name that is a range-bound stock. It tends to, find support around the mark of 80, and we saw it come off with most of the other financial names as well. And at the lower levels, we've seen buying come in about 1.5 crore shares added there, as well as NTPC and GAIL seeing buying anywhere between 1.5 crore shares in the last month. On the other hand, we've seen selling come in the likes of Shrey Equipment Finance, IOC, where they've sold over 1 crore shares, as well as BHEL. Motherson Sumi is an interesting name to note here, because we've seen positive news flow coming in as far as the US-China trade wars are concerned, and we saw the stock move up considerably. In fact, in the last 1 month, it was up almost 35%. So I believe some amount of profit booking is seen there. So 88 lakh shares gone there. Bharti Airtel was also in the news after the Supreme Court order there. They've sold about 74 lakh shares, and the stock has been persistently under pressure, along with SBI, where they've sold about 57 lakh shares. In terms of new holdings that enter into their portfolio, well, there's only one change, and that is IRCTC, where the company came out with its IPO last month, and the stock is already close to 3 times to what its issue price of 320 was. So IRCTC, they've got in almost about 28,000 shares in the company, and they've completely moved out of Group Finance, where they've sold about the 2,400 shares that they held as of the previous month. So Group Finance goes out of their portfolio completely.
Okay, Yash, thanks a lot for bringing that update with regard to rejig in the portfolio of ICICI Prudential. But I just want to quickly mark the markets. We're almost at the lowest point of the day. 11,868 is where Nifty is trading, and you've got Nifty Bank also correcting nearly 1.2%. Before we get your technical check on the indices, I just want to mark Raymond as well. If you could just pull up the stock. Remember, this was an outperformer last week. It gained 36%, and now in a weak market also, it's holding up with gains of 5 to 5.5%. With the stock going up 36%. It's no longer, by the way, in the futures and options market. So there were some traders who would have shorted the stock in the cash segment at higher levels. Last week it was trading northwards of 800 rupees. And now traders who shorted, who could not give delivery of the stock, they have to participate in the auction. And if you go by the recent file that has been uploaded on National Stock Exchange, 2:30 p.m. is the time when the auction starts. And as I can just verify, the average auction price for this one is somewhere about 810 rupees, which essentially tells you the stock will be getting support, because you have a parallel market, that's the auction market, where short sellers will now have to buy even at higher levels today. And 793 is where currently the stock of Raymond is trading, after gaining nearly 36% on the restructuring news last week, Neeraj.
Well, interesting moves out there. The question is, Navneet, can post the technical triggers getting over, and otherwise, will there be fundamental reasons for the stock to continue doing what it is doing as well? Because that's the other big tricky bit, right? They've spoken at length about their plans ahead, but it's an interesting time for this company.
True. The last week gains were primarily on account of the fundamental news which came on restructuring. They will be demerging their lifestyle business, and that company will be getting listed. I think the more important question is, where does the debt go now? Will that go in the lifestyle business or not? I think that's what the traders also betting on.
Yeah, and maybe just the market will be a bit wary about the history of this stock as well. It's not necessarily been the one that has rewarded shareholders thick and fast. Let's see if it can do something this time. There's something different this time. Manav Chopra of Indiabulls Ventures joins us on the show to talk about the markets at length, by the way. And we'll also talk about Raymond. I asked him about Raymond, but the Bank Nifty is shown an even steeper fall in the last few minutes. So maybe put in to kickstart the conversation with the Nifty Bank and then talk about the other things. Manav, good having you. Thanks for joining in. About 383 points. Just at the start of the show, I mentioned that this doesn't seem to be a deep gash, but maybe a bit of chipping off. Now it seems to be getting deeper. Will it get contained, or do you reckon lower levels for the Nifty Bank?
See, the markets overall has been in a sideways consolidation. In fact, we have seen around about 6 weeks of consecutive rally coming in the Bank Nifty. So some bit of a cool off in Bank Nifty even from the current levels does not happen or dampen any of the near-term trend that the markets have established. On the lower side, 30,600 for the Bank Nifty is an important support, and we have seen a good amount of even call writing happen today, which is indicating that 31,000 will continue to maintain as a very stiff resistance. For the Nifty index, the immediate support is at 11,850 to 840. So this is a very important trading band for any short-term traders also for the market. So currently, for a very short-term trading, the markets are at a make or break support. So in case if the support is breached, you could see one leg of corrective decline on the lower side. But talking on the medium-term perspective, the trend is definitely bullish. You could see an odd few percentage decline, which could be corrective in nature. But looking at the near-term perspective, any short-term traders below 11,850 on closing should definitely exit their short-term long positions and eventually can revisit levels at the lower juncture. So overall, we are looking at the markets on a very cautious basis in case if the support is breached, but the medium-term trend is bullish, and we would want to looking at the lower levels for a long-term perspective.
Okay. So that's the view on the index. Ruchit Jain of Angel Broking also with us. Ruchit, what's your sense? Would you be initiating any fresh trades on any of the key indices?
Yeah, hi, very good afternoon. Well, if you look at last almost 8 to 9 trading sessions, the market has consolidated in this range of 11,840 to 12,000, 12,050 on the higher side. We believe that this is more of a time-wise correction within an uptrend. 11,840 is now the crucial support from a near-term perspective. So I think if one has to take any fresh trade, then if we get again see index heading above 11,900, then one can, these are the spot levels above 11,900, then one can initiate fresh longs, then with stop loss below 11,840, expecting again the higher end of the range of 12,000, 12,050 to be tested again.
Okay. So in light of that, what should be a stock-specific strategy if this is indeed the index strategy? Manav, if I come to you first, keeping in mind the view that you have, what are the stocks that you're recommending in the session today?
Yes, so I have two buy calls. My first call is a buy on Shriram Transport Finance. In fact, on the monthly charts, we have seen a very strong base formation and the prices are forming a consecutive series of higher bottoms. 1100 on the immediate basis is a very important support, and we've seen the stock also close above its long-term averages. I sense in the near term the prices are forming a good strong base and eventually would see a good strong break on the upside, and there is a limited downside as we have already seen a weekly trend reversal. So recommend a buy into this with a stop loss of 1100 for an upside target of 1220. My other pick would be a buy on Federal Bank. In fact, on the weekly charts, the prices are at very important support clusters of around 80 levels, and we have seen in the past that post consolidation from the 80 zone, the prices have retested the levels of 95. So it's in a broader trading band, and currently at the lower end of the support provides a good risk reward ratio, and the oscillators are also hinting for a bounce from its oversold levels. Recommend a buy into Federal Bank with a stop loss of 79 for an upside target of 95.
Okay. Ruchit, what about your top picks for this afternoon?
Staying with the broader trend, I have two buy recommendations. First is a buy call in Tata Chemicals. We can see a high top, high bottom structure on the daily charts. The volumes in the recent up move has also improved. So we are quite positive on this stock, and we are expecting an up move towards 675 in near term. From a short term perspective, traders can buy at current levels with stop below 620 for target around 675. And my second pick is a buy call in Shriram Transport, and the Manav has already given all the technical reasons why it's looking positive. So with a stop below 1105, we recommend buying Shriram Transport for near term target of 1210.
Okay, so those are some technical picks coming your way. Remains to be seen whether we can see any sort of recovery in the last hour of trade like we saw on Monday. But Nifty is currently trading below the mark of 11,900. Let's bring in our fundamental guest then. Sanjiv Bhasin of IIFL Securities is joining us on the show now. Hi Sanjiv, good afternoon. Thanks a lot for joining us. A lot of these stocks or rather companies which have posted number from the broader markets, be it MGL, Indian Hotels, all of them are doing pretty well today. So any of these earnings which stood out for you specifically?
Yeah, good afternoon. Yeah, so you are right. I think Indian Hotel and MGL have given startling performances. So the gas utilities, IGL, MGL, even GAIL, I think the numbers were fairly okay. There was a one-time loss because of the lower prices with the PNG RB gave, but I think gas utilities are in a very sweet spot. And Indian Hotel has truly, taken the cake as far as the mid-cap numbers go. But I even felt some of the banks came out with good numbers, particularly Bank of Baroda and Canara Bank aside from State Bank. So I think there's a whole host of numbers which have been out. Some have been at par, but some of them have shown that the guidance ahead seems very, very positive. Also, let's not murk everything with the IIP numbers because September would arguably be the worst month. I am very, very optimistic that this festive season in October will bode very well. So use all declines to buy because we think this is just the tip of the ocean. We think next week onwards we should be up and running to scale new highs by December.
Mm-hmm. You think this is a period of consolidation, Sanjiv, that happens typically after a big run?
You've reached 12,000 in a jiffy. In 2 months, you've been grappling with 10.7 and now you've hit 12. So obviously there will be a lot of pessimism and profit booking. But we are definitely lurking much higher. And more than that, I am very, very positive on the broader market. I think that outperformance is here to stay. Clearly, the two most hated and worst performing sectors, auto and metals, are going hand in hand. So I think the risk on rally is back, and we think that 2020 will bode extremely well for the broader market, which will outperform the Nifty in the next year.
Okay, that's Nifty Metals Index, which is down about 1.5% as we speak. The other space where some divergent moves are coming in, pull up ITC. I think that's at the lowest point of the day. It's a heavy weight on the index, so that definitely contributes to the moves that we're seeing on the index. ITC down 2%. And look at the other cigarette players, VST and Godfrey Phillips, which is at 52-week high today. Both the other cigarette makers are witnessing gains of about nearly 2 to 5% higher actually for Godfrey Phillips, and VST Industries is sitting with gains of about nearly 2%. Sanjiv, correct me if I'm wrong. I think you've been suggesting to buy ITC in the past as well. Of course, it's been a laggard for last many years now. What's happening here? Because we've not seen any concrete gains. That overhang of taxes will always remain for this company. But in terms of valuation, that argument, does it still hold? One should look to buy at current levels?
Yeah, I'll give you 2 examples. For six years, Reliance did nothing, and in 2 years, it's up 3 times. Same with Microsoft. For 8 years, it did nothing, and in last 2.5 years, it's become $1 trillion. So I am very, very bullish on ITC. I think the pessimism is overdone. It is the best blue chip in the Nifty to buy. At 1 year forward at 20 times, it's the best it's been in this range. Look at the paper business, ITC Bhadrachalam. Look at the cigarette business. Look at the FMCG. Look at the hotel business. Look at your Starbucks, all the paper, the recycled. So I can go on. I think this is a univocal buy. So what if it's not done much? I agree that it's been more than 1.5 years. But like I said, good businesses are to be meant to stay in, and wait, your patience will be very well rewarded. I would say 350 in the next 1 year is definitely on the cards in ITC.
Mm-hmm. Well, I'm wondering, Sanjiv, from amongst the companies that have come out with results, and we talk about the kind of expensive valuations that they are trading at. I remember you recommending a buy on Britannia some time back. It's played wonderfully well. Today the stock has reacted positively to its numbers. At least it did react positively on open, and currently about 4.3% as well. What happens here? I mean, now do the valuations become a bit more punchy and therefore the risk reward a lot more unfavorable? Or are you still bullish on Britannia?
So Neeraj, we've been bullish on Nestle, Britannia, Asian Paints, and in the last 2.5, 3 years, these stocks have doubled. These have been core portfolio picks, but let me tell you, we are not advocating any more buys here. If you have it, try and book profit. I am of the camp that the broader market can't be at such dismal market caps. So I am not in the camp which is going to chase 70 times earnings 1 year forward and so on. And I can stick my neck out. The broader market is extremely positive. Another one of these plays which was at 600 was Godrej Consumer. That has played out brilliantly, 25% up in the last 2 months. So you know, we'll keep having opportunities to buy. But if in this stroke FMCG cigarette play, there is one play where I can be overweight, it is ITC. I would also use any decline in Marico to buy. McDowell's is another pick which I think can make you which can make you great money in the next 1 year. So I am not chasing the large caps, particularly on the staple sides. I think they are fully priced, and you know, the current rancor is such that stay with the large caps. I think those portfolio picks are not going to do much. If I'm going to look to double or triple my money, then I have to be a little bit more on the riskier stocks where the valuations are extremely compelling.
Well, just look at the moves that Britannia has done though in the session today. I think Sanjiv's point is well taken, but Manav, I wonder, for somebody who does do a bit of trading and let's say was long on Britannia, is there merit in holding on to the longs in this current uptick that we're seeing, or would you take profits off the table?
See, this stock overall has been in a very good established uptrend, and I believe after a good 10 to 12 months of consolidation, since the prices have come out of its range a few months back, I sense in the near term, you know, there could be some more legs on the upside. On the lower side, yes, the prices after a good momentum rally has been anchoring and forming higher base. So I believe on the immediate basis, 3,000 to 3,100 on the lower side is the new established weekly support zone, and as long as these support hold on, eventually you will see the prices moving higher. These would not be compared to the other high beta names. You know, a stock like Britannia would take its own time, but yes, since the price and trend is established, looking at the current scenario, we expect the prices to take its recent swing high of 3,400 and eventually move higher. So on a medium term perspective, one can definitely expect levels of 3,500 to be achieved. The overall trend is still established, and you know, it has formed a very strong support on the lower side.
Okay, by the way, there is some selling pressure which has come in the last 15 to 20 minutes of trade. We've breached the recent low of 11,850 as well on the index, so keep an eye on that. I believe that was the first support which the traders were watching out for today's session. Sun TV, pull up that stock, and in fact we highlighted even on the future side, we've seen a huge amount of shorting coming by, and the reason for that is the earnings for the September quarter which were muted. Now this is one media company which has been losing market share. The ad revenues were not great for the quarter gone by, and even the subscriptions were impacted because of NTO implementation. Let me get both technical as well as fundamental check on this one. Ruchit, let me come to you. 473 down 10%, huge shorting seen. Would you advise someone who would have shorted at higher levels to book profits, or there is more room for downside here?
I think we could see some more pressure in the stock in next few sessions, and around 440, 445 could be the range where the stock could come. Two reasons, primarily because one is that in the derivative segment we have seen good amount of short formations today, and also if we see the NSE cash segment volumes, then the volumes in today's down move is quite high, and usually whenever we see price corrections with backed with high volumes, then such stocks tend to show underperformance in short term. So, and if any existing short positions are there, then they could continue to hold with for targets around 445.
Sanjiv, your view on Sun TV, if you track the company and if you did have a look at the numbers?
Well, numbers are in sync with what the economy is going through. You know, ad revenues are maybe at the lowest, and the management has guided. But where do you get a business which has margins in excess of 65%? Secondly, they've invested a lot in the OTT, and they are saying they'll break even they'll start to show positive results by FY21. So great business to buy. Yes, there has been a decline in their market share, but subscription rates are going up, and you are aware that this is a time when media is going to go through a huge, consolidation. So I would rather skip Z and look at Sun. Sun at these levels. We know that they've got a dominant share in the south, and this OTT and increase in subscription rate, this could be the icing on the cake in the next quarter. So I think these are all opportunities to buy. We think this is also the cusp of the lowest as far as the economy goes. And if you start to see more ad revenue and the likes of that, then businesses should start to be getting back to normal.
Well, but currently down about 10%. Sanjiv, the other set of stocks wherein there are selectively there are some chinks in the armor is some of these specialty chemical names. Now Vinati Organics today, both in terms of the numbers that they delivered and in terms of the guidance that they've given, is reeling under pressure, 129 odd points, and that's the problem with these expensive names. 1 quarter of growth moving off and the market loves to punish them. Do you, one, have a view on Vinati Organics, and two, any thoughts on the specialty chemical space at large, if not Vinati? Anything that you like or anything you believe is expensive?
Well, Neeraj, I have had investments in 2 of them from 20 years, and for 10-15 years they did nothing. 35 was the price for SRF for years, and so was the case with Atul. But now they are where they are, and I still own them. In our portfolio, there are our 2 top picks. We want to stay with the market leaders, so SRF and Atul on all decline should be bought. Margins, numbers, new highs are telling you that the businesses are doing extremely well.
Okay, so you believe Atul is amongst the top ideas from your end. Okay, Sanjiv, one more question. I mean, it's something that on which all the bulls have gone right, but the question is whether it's prudent to take money off the table or no, is HDFC Asset Management Company. 5% up on open today. On open, the market cap was about 75,000 crores and it's still staying strong on high volumes despite very, very punchy valuations. If you were to put in fresh money, Sanjiv, would it be in HDFC AMC, or would you choose a Reliance Nippon Asset Management, or would you choose some of the other financial names which have an AMC embedded in it at some point of time which might list?
Firstly, the specialty chemicals had 2 names. The first is SRF, second is Atul. We own both of them. That was a disclosure. Now, coming on the expensive part, yes, this is only big and getting more bigger. Same is the case with DMart, same is the case with Indigo. These are businesses where brands are well entrenched, and I think no high is the limit for them. But at this price, I would look at some other businesses which are correlated, like you said, to the asset management. It includes insurance. A dark horse over there would be a very, very prudent name, which is a duopoly in batteries. That is Exide. Exide has a very strong franchise. It has proven very good numbers, but it also has an insurance arm which is doing extremely well. And I think the valuation of the insurance business is not being discounted at all. So Exide would be one dark horse which I think will gain a lot of market share. Amar Raja and them both came out with very strong numbers. On the other side, I am also very bullish on the correction I've used in Piramal Enterprise. I think their subsidiary businesses also include a part of that. They should be a relative outperformer. But, like you said, if you want to be in the business, then be in the market leaders. So that continues to be HDFC, AMC. I am not looking for alternates. If you want to be in the asset management business, then you got to own HDFC.
Okay, if you have to be in asset management, you got to own HDFC. The question that I had, Sanjiv, so therefore, but I think Sanjiv's answer that at this price, maybe you look at some of the other businesses as well, because the valuations are just a bit more punchy. Sanjiv, Bhasin, take a moment to thank you, and well, your optimism has paid off thus far. Hopefully we see better times ahead as well. Thanks for being with us today. And that's HDFC AMC, one of the names, but just the stellar run that it is having, 3,500 and counting. And for all the conversation that people did about how RM is playing catch up, if you just look at the last 15 days, there's been a chalk and cheese behavior ever since that MSCI numbers came about. HDFC AMC 1 month 30%. RM too would have had good gains, but RM has lost a bit of sheen as well. Look at that, 31%, but has lost a sheen from the top. So almost equal returns that have come in for that as well. But just veering for a moment off markets before we get back to our experts, some important rulings coming in from the Supreme Court. The court has ruled on the validity of the Finance Act 2017, especially on Section 184 that deals with the rules on tribunals. Arpan Chaturvedi is joining us on the phone line for more. Arpan, fill us in on what does the Supreme Court have to say?
That's right, Neeraj. So what the Supreme Court was hearing today was a challenge to the Finance Act 2017 provisions, and specifically the Section 184, under which the terms and conditions of the appointment for members at various tribunals and the restructuring of tribunals was done. What the court has said while the Section 184 is constitutional, but the rules framed under them are unconstitutional, and therefore the Supreme Court has struck down the restructuring and the changes in the terms of and conditions which were now after the new rules were under the control of the central government. The top court has struck it down in its entirety. They've asked the Supreme Court, they've asked the central government to reframe the rules, and in the interim, what will happen is that the appointments to various tribunals will be made as per the existing laws. There was one other interesting question that was in consideration of this bench, which was that whether the decision of a speaker to certify a bill as money bill can be subject to judicial scrutiny. The Supreme Court majority judgment has not given an answer on that particular question, and that will have now been referred to be decided by a higher bench.
Arpan, in the other ruling, the Supreme Court has also ruled in the case regarding the question of whether the Chief Justice of India falls under the ambit of the Right to Information Act. Tell us what is the court ruled and what are the major takeaways from that ruling?
That's right. So this is a case that has been going on for a long time. This case came to the Supreme Court after the Delhi High Court judgment has ruled in a petition which was seeking the names of the judges who had declared their assets, and the Delhi High Court had ruled that the office of the CJI falls under RTI and has to give this information which the petitioner had sought. After that, the Supreme Court Secretary General and the Chief Information Officer appealed the Delhi High Court judgment in front of the Supreme Court. And today, the 5-judge bench, which interestingly consists of 3 other judges who will go on to become Chief Justice of India, has held that the office of the Chief Justice of India falls under RTI. And there was some discussions on the right to privacy, which the judges are entitled to. Justice Chandrachud in his judgment said that both will have to go hand in hand, and they are not absolute even for judges, and judges cannot be beyond the rule of law, and therefore the 5-judge Constitution bench has unanimously decided that the office of the Chief Justice of India is a public authority under the RTI, and they have said that now the Supreme Court Chief Public Office, Information Office, will have to decide on the RTI applications, keeping in mind what the guidelines the Supreme Court is laying down in these judgments.
Okay, Arpan, we leave it on that note. Appreciate you joining us and taking us through that major takeaways from 2 important Supreme Court rulings. And I just want to divert attention back to markets. We are at day's low. I was highlighting we've reached the recent low of 11,850, which was a support. Look at that selling pressure, which has just come in the last half an hour, 11,825. Of course, now the traders will be watching out for 11,800 on the downside. And we have seen renewed call writing now coming at levels of 11,900, which is telling you that the base now could be moving lower with the correction of almost 90 points that we've seen on the index, and Bank Nifty right now is down 550 points, nearly correcting about 2%. 30,550 is where it currently trades. All right, moving on and talking, since we were talking about banking, the worst of the banking system has passed us. That's the word from SBI Chairman Rajneesh Kumar in an exclusive interview to Bloomberg's Haslinda Amin. Kumar talks about why he feels that the current economic slowdown has bottomed out. Listen in.
As far as the slowdown is concerned, so I am seeing that it has bottomed out. So from here after, things should be much better.
So in terms of clarity, it's not looking too bad for SBI. How about the rest of the banking industry?
So banking industry also, like if I look at what the numbers are coming out from different banks, whether they are private or they are public sector, all of them have done relatively much better than what their performance was 1 year ago. So system is slowly coming out of all the difficulties they had. And but to say that everything is now hunky-dory and everything is all right, so that would be an over-optimism. But at the same time, things are looking much better than what they were.
What will it take issue to be fully resolved?
These are when we are talking about broader economy or the economic growth, it is not one thing which impacts. There is not one thing which brings the slowdown, and there is not one thing which can suddenly, give a boost. So it is a concerted action by the governments, by the central bank, by the banks themselves. So there is a series of actions which are taking place in the different segments.
Dewan House has been the poster child issue in India. If we have not seen the worst of it, do you think it should go bust? It should be let to fail?
No, but we have seen the worst of it. March 18 was the worst year as far as the banking system is concerned, as far as NPLs are concerned. And after March 18, the NPLs have started coming down in terms of gross NPA percentage.
The RBI, the Reserve Bank of India, has come out to say that it wants to link bankers' pay to performance. Do you think it will help the bad loan issue in any way? 75% is still. It is with the public sector banks where there is no issue around variable pay. It is all fixed compensation. So I don't think there is any direct correlation or link between what has been proposed by the Reserve Bank of India. It will impact more the private sector performance. I hope that the banks which were in corporate banking, it may have some impact about their decision-making process. But at the same time, I am praying that they don't become too risk-averse.
Well, that's State Bank of India, and banks clearly in focus right now. It's just a very precipitous fall, 548 odd points, and dragging the Nifty along with it. Before we move any further, let's also figure out what's made it to Sharad Dubey's list of the Fab 4 stocks of the day. Sharad, good afternoon. Some of these stocks may have, lost their sheen a little bit, but what's made it to your list?
Well, good afternoon, Neeraj. The first stock is Indian Hotels. The stock is up almost 5%. It posted a good set of numbers, but something which I would like to mention is the hotels company said that they'll require the remaining 14.28% stake in the Claridge's hotel arm and Excalibur for a consideration of almost 250 crore rupees, and it will also acquire a hotel in Pune for 108 crore rupees. So this acquisition will happen, in conjunction with the investment structure with the government of Singapore's GIC fund. Up next, we see Edelweiss, which is up almost 5% after PE firm Sanaka Capital will invest almost $75 million into group's investment advisory arm. Up next, we see IDFC. It's up almost 2% after almost 70.2 lakh shares have been exchanged into large trades. We don't know the buyers and sellers yet, but we'll get the same information to you post the market hours. And the last stock of the day is Mahanagar Gas, which is up almost 3% as we see fresh longs with a high open interest of almost 27% and the volumes trading almost 2 times its 20-day average. Back to you.
Okay, Sharad, thanks a lot for bringing those Fab 4 stocks of the day. But besides that, we were talking about TCS, how that's been trading with good amount of gains. And of course, the correction that we've seen in the markets in the last half an hour, that's not dented the move on TCS. It's in fact sitting at a day's high with gains of 3 to 3.5%. Ruchit, very quickly on the charts then, 21.75. What do you make of the move? Should one take any position currently or wait it out?
I think recently we have seen an up move from 1875 to 2270, and after that in the last 7 or 8 trading sessions prices have retraced some of those gains. Taking support near 2090, prices seem to again resume the positive momentum. So from a very short term perspective, one has to take any position, one can create fresh longs with stop below 2090 for target again around 2260 to 2280.
Okay, that's TCS for you. And the other stock which has moved higher is AU Small Finance Bank. I think there's a sharp move which has come in. It's hit its 52-week high, its all-time high levels. It's up 12 to 13%, and this is not on back of earnings because they've already come. The asset quality was maintained for the quarter gone by. I guess the GNPAs were somewhere about 2%. Let's get a fundamental view from our next guest. If he tracks the stock, we're joined by Yogesh Mehta of Yield Maximisers, who joins us on the show. Hi, Yogesh. Good afternoon. And thanks a lot for joining us. In case if you track AU Small Finance Bank in a weak market, there is some buying interest seen for this stock. It's at lifetime high levels. The numbers have already come. If you track this one, what are the growth prospects here?
seen the number on the from overall perspective, but not much of a detail which I have gone through in that, and not tracking into that much detail. But overall, the prospect for the companies which are especially surviving into these dull times, where we have seen that Q1 numbers and Q2 numbers, and this company has delivered some kind a better growth than other companies, like what we've seen in terms of Equitas and Ujjivan. So the small finance bank into AU Finance, that has delivered some better numbers, and seems the prospects are much better. That's why we have seen some kind of a switch from non-performing to a performer. This clearly seems that fund switch is visible into the stock counter.
There is one set of numbers that the market is watching out for today, Yogesh, and that is IRCTC. Now, what do you expect an investor could or should do in IRCTC? It's up about 1%, 941, looking at the quarter gone by and looking at what could come ahead.
Neeraj, the company has almost a monopoly business, and market has always given a thumbs up where we have seen all this monopolistic business, like maybe it's Air India or DMart India, or earlier days it was a Titan, and this time it's IRCTC. So all this putting together, it seems that the annual number which I have seen on the projection side for FY19 to FY20, the PET CAGR would be in terms of would be in the range of maybe 9 to 22% CAGR growth rate over next 2 years, FY20 and 21. So I think on the quarterly numbers today, everybody's expecting 20 to 23% growth rate, and that will be on a persistent basis. So maybe Q3, Q4 altogether, and that is why I think it has corrected from all-time high, making a new all-time high. But still, post the numbers, we will know about the prospect for that. But anyway, any fall into the stock price, maybe 10-20% fall.
Just losing that line a little bit. We'll just try and repatch that. Meanwhile, a couple of other names. KEI International, they won a large order, 2,255 crores in the transmission, transport and relay operations. The stock has shown a bit of a spike, 1.5% higher in trade. The other one, and wonder if IIFL India is moving up in the session today as well or no. I think it's inched up a little bit, about 12% higher now. So it was steady at that 8.5% mark. Now 12%. So after, this is the one stock which almost continuously in the last 2 months has done only one thing, and that is inched upwards. It's, as Nomura's report says, it's riding the internet wave. They initiated a buy when it was at 1400 with a target of 1900. It's up 240 rupees from that point. So the winners are keeping on going higher in trade, which is quite remarkable, really. Ruchit, it's not a very long history that IIFL India has, but whatever little you have, can you make some prediction, or is it difficult to do that?
The target prediction is quite difficult, but one thing is that after listing, since 13th of September, the prices on the daily as well as the hourly chart have been forming a high top, high bottom structure. So if any existing long positions are there, then I can recommend a stop loss for them. 1360 is now a good support base, 1360, 1380. So one can continue to ride on this trend with now stop below 1360, and since the projecting targets are difficult for this one, so the best way to ride this trend is to keep a trailing stop loss method, and as the prices inch higher, keep trailing till the stop loss is higher.
Tell you what the Nomura report says, of course. They have, of course, initiated a buy. They're calling, of course, this one a leading digital ad tech player in India. They believe the underlying macro is attractive in the key markets for IIFL, which is India and Southeast Asia, where a large internet user base, rising smartphone sales, improved data connectivity, and young demographics augur well, simply because they have exposure to high growth markets as well as segments, and they offer end-to-end offering plus the CPCU model, driving the return on investments and client retention. Nomura's expectation is that IIFL could give a revenue and an EPS CAGR of 34% and 39% respectively from FY19 to FY22. This is their base case estimate, I reckon, and as a result of which they have put out this very aggressive buy call with a target price of 1900 on IIFL India. And look at that stock move. It's just remarkable the kind of gains that this stock has had. And We speak about a lot of new companies doing that, Navneet, just consistently with which IIFL India is doing it. IRCTC's had some gains, then a pause. Somebody else has had some gains and a pause. IIFL just keeps on moving higher.
That's right. In fact, Neeraj, we spoke to the management on Monday. The numbers were pretty good. They posted a bottom line growth of nearly 50%. And, you know, one key risk is a client concentration. Around 65% of their revenues have been coming from the top 10 clients. That's what their presentation stated. But clearly, management is not too wary about it. And they've said that they are, reviewing all of that, and they don't foresee at least any sort of concentration risk. But the numbers were good. Bottom line growth of 50%. They managed to expand their margins too for the quarter gone by to about 22.2%. And as Neeraj was highlighting, a couple of these niche segments, despite of market environment being subdued, be it from the insurance space, you've got the new digital play, e-commerce companies, or for that matter, AMCs. These are the pockets which have been outperforming in the recent past. And 11,851, by the way, on Nifty. So you've seen a bit of recovery from lower levels once again. If Yogesh is back with us, okay, he is back with us. Pull up Amara Raja Batteries. Yogesh, this was the stock which was up 10% on Monday. And so far, the battery makers have not given any returns this year. But Amara Raja, the September quarter numbers, operating performance was good. We did see some bit of margin expansion coming by. I guess that was from the replacement market because revenues from the OEMs is still down owing to the, of course, volumes that we've been seeing for the last 12 months. Would you look at a battery maker like Amara Raja after outperformance from the September quarter numbers?
Navneet, the number on the prima facie is visibly, optically looks good because of the replacement market, as you mentioned. But I think the way we have seen the numbers which have come out from the auto numbers, where the battery pickup would have been equally good. But this is only for the for the month of October. I think again this is only the reaction on the stock price is only for that. The instance of result. I don't think that there is any optimism about the stock price to have a better upside. I think 730.40 hardly leaves any upside for investors. 780 to 800 would be the max, because again we will see some jittery kind of a situation for auto companies, and so as for the batteries. We have seen a technological tie-up which has been on a limbo in the last month when the announcement came, and the stock price was 650 around. But this is just maybe a technical short covering or a short trap has been happened due to the result. But upside seems to be very limited on the fundamental ground.
Okay, within the same space, Ashok Leyland, of course, the numbers were weak, Yogesh. But do you think the stock's bottomed out? Is it giving you any sort of valuation comfort because the stock post the numbers has been moving higher?
Overall, Navneet, for Ashok Leyland, the numbers are not much more important, which have seen, and monthly numbers are around 12,000 to 13,000 run rate. But the scrappage policy will play an important part for Ashok Leyland, and any which ways on a P multiple side, it is attractively placed right now, and the numbers are already out, and we have seen a cost optimization and cost cutting. The company has taken that process, and that will drive some kind of a profitability further in the future. But between 70 to 80, I would say one can start adding into the portfolio, and maybe over a period of say 1.5 year, maybe 100, 110 is visible.
Okay, 100 and 110 in the next 1 year is something Yogesh is highlighting with regard to target. The other biggie, heavyweight, Reliance Industries, so that's also up about 3% right now. Manav, what do you make of the moves today on the charts at current levels of 1474 for Reliance Industries? Would you advise taking any position?
See, the prices have seen a good breakout today from its important resistance level. It has actually witnessed a small corrective decline recently, and this breakout indicates that there could be some more legs on the upside. The overall trend for the stock continues to remain bullish. So on the lower side, 1450 to 1440 are the important supports. So anybody holding long positions or want to initiate long should have a stop loss below 1440, and we expect Reliance to see this rally to continue on the upside. The immediate target that we see would be close to 1530 on the upside, and that could be achieved in the next 3 to 4 trading sessions.
The currency, Navneet, and multiple factors why we spoke about some of these in the morning as well, but multiple factors including the growth numbers and otherwise, the US-China trade concerns, whatever you call whatever the factors may be, but I think there has been some weakness in the rupee, and not just the Indian rupee. I think clutch of other basket of other currencies have done that too. Should pull up the rupee chart, the intraday or the rupee, just the rate, and at 71.95, this is substantial weakness that has crept into the Indian currency in the session today. Do watch out for that. We'll talk about this in a bit as well, but it's time now to do what we do this time every day, which is get you a sense of what daily rooms are recommending. Yatin Mehta and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Yatin, let's start with you first.
Neeraj, Tata Chemicals is one stock which is buzzing in trade, and the volumes have been quite decent for trade today. Almost 6 lakh plus shares traded, and in fact the future and option segment also witnessing some bit of long positions being bought today. Dealers on the basis of different trends are recommending a buy today, sell tomorrow kind of a strategy. Of course, given the fact that market is trading almost at the day's low, we have the stock which is almost flat now versus 2-3% up during the day. We also have Nestle India. That is one stock wherein dealers do indicate that FMCG stocks are all-time favorite for the trading month. In fact, they do believe that from here on a couple of these FMCG names could do well. So domestic funds are looking to accumulate more of Nestle. And finally, Edelweiss is one stock which is in focus. Remember, they came out with their earnings. Asset quality did worsen, but in the kind of capital raise that they have done, along with some tie-up on the real estate fund, is something that HNIs do believe is substantial for the stock price to appreciate from current levels. 5% up on that one, almost 77 lakh shares traded. But Darshan has a few more stocks to talk about.
Yeah, so KEI Industries is something that a couple of dealers indicate it's not doing much. Volumes are also average, but dealers indicate that at lower levels, yes, there is some bit of HNI accumulation that's happening. Came out with very strong set of numbers and has already rallied. So that's something that you watch out for. Again, Reliance Industries is the other one, up 3%. One of the key reasons why the Nifty hasn't collapsed as much as the Nifty bank. So TCS and Reliance Industries are holding up the Nifty. Some of the domestic funds are active in Reliance today. And finally, Bajaj Finserv traded and hit record highs today. It topped the 9,000 level for the first time ever. The dealers believe that the momentum will continue on Bajaj Finserv over the next few days. So that's something that they're speaking about.
Well, do watch out for some of these names as well. Thanks, Darshan, for that. The biggest consideration, of course, remains the currency, which is at the lowest level since September 15th. Now, call it the fear of trade concerns or the growth macro worries, Moody's recent outlook downgrade, what have you. But all of these factors seem to be weighing in on the currency at the same time. It's the worst performing currency in Asia today. And well, that speaks volume, 71.9825. That's quite a steep fall that's come into the Indian currency vis-a-vis some of the other Asian currencies or even the global currencies for that matter. We'll try and definitely talk more about this. I wonder if the IT stocks, as silly as that correlation is, but sometimes the market loves making that. I wonder if the IT stocks, TCS, Infosys, etc. could all be doing well. They are. Nifty, IT, okay, Infosys isn't. Of course, that's got reasons of its own. Tech Mahindra, HCL Tech are the others that we should try and see. Nifty IT2 actually not getting enough of a leg up. Actually, any trade out here, or would you just ignore it? Manav, can I come to you on that? Nifty IT or any of the large cap IT names?
See, we have seen the IT space overall being, in a sideways to a downside move. There has been a very strong uptrend move witnessed in TCS today, but looking at the chart of HCL Technologies or Wipro, we don't see any decisive breakout either side. They are trading in a broader trading band. So at the moment, besides TCS, there is no trade-off. And looking at the IT as an index, we still need some more confirmation. So for the IT index as a whole, I would just want to, avoid it for the near-term perspective till we see any trending move coming out. But I maintain a slightly negative bias to an underweight into IT index for at least a medium-term perspective. So for even short-term trades, I sense if any pullback rally on the upside, one should reduce even at the higher levels instead of going long.
Okay, that's nifty ID for you. Pull up Titan. Remember, this one corrected nearly 12 to 13% last week on guidance cut, and this stock has not managed to see any major recovery since that sharp fall that we had seen post earnings. Yogesh, of course, the earnings were weak because of gold prices inching higher and a couple of hedges which the company highlighted, but the major dent was the guidance cut for the second half on the jewelry segment side. Do you think, of course, the valuations are still expensive, 50 times FY21 earnings, but do you think, considering a company like Titan, which is only gaining market share post GST, post demon as well, from unorganized to organized player, in the current environment, it could give you better returns vis-a-vis other stocks?
This time it could be a win-win situation for Titan because in the Q1 numbers also the same kind of disappointment we have seen, and the stock was 10-12% down, and again try to recover the ground, and all-time high it has touched there. But I think about the second quarter number, because the guidance has been revised down and the gold price are sustaining on the higher side, that will have Indian psychology that demand will taper off from here. The people will not buy as an investment, but it will be there will be a clear hesitance of buying new gold jewelry. Though the market share from unorganized to organized remains very constant for Titan, but the growth rate which was being incorporated for the high P multiple, that is now moderation into the P will come into the play, and probably this time we can see much lesser kind of interest for Titan from the current prices, maybe a 10-15% fall, and then we can see some kind of interest building up into the Titan.
Okay, that's Titan for you. Before we get you some closing strategies, your high beta stocks like Yes Bank and as well as Indiabulls Housing, both of them are under pressure, seeing correction of about 7 to 10% respectively. Yes Bank down 6 to 7%. Indiabulls maybe marginally recovering from the lower point of the day, but still sitting with cuts of about 8%. All right, just 10 minutes to go, so let's get you some closing strategies for tomorrow's trade. Manav, coming to you first. Any BTST or any STBT?
Yes, I have two calls. One would be a buy and sell. My first buy would be on a TVS Motors. In fact, we have seen a corrective decline, and post that, after a good 2 or 3 days consolidation, there has been a breakout today on the daily charts, accompanied by good amount of volumes and open interest. I sense this stock would see some more strong momentum rally coming on the upside. A buy with the stop loss of 452 on the lower side for an upside target of 485. And my second would be a sell on Equitas. In fact, we have seen a breakdown from its weekly support levels, and which has been accompanied by above average volumes. The stock has stiff resistance at 86 to 87 on the upside, a stop loss of 87 on the upside, for a sell for lower targets of 82.
Okay, Ruchit, what about you?
I would recommend a sell call for STBT perspective. I would recommend going short on Grasim for tomorrow's session. Probably in the last 6 or 7 trading sessions, prices had traded in a range, and the support end of the range, which was around 754, has been breached today. So keeping a stop above 755 or 756 now, no one can go short on Grasim. The rising trendline support target would be around 700 to 705. So go short in Grasim for target around 705, keeping stop loss above 757.
Okay. We'll watch out for those names as well in the session today. They want to pull up two stocks, Edelweiss as well as Indiabulls Real Estate, and both have had some pretty interesting moves the last couple of days. Edelweiss up 5% yet again today on 8 million shares traded, so remarkable uptick out there. They've had some positive news today with some investments by Sankar Capital, a PE firm. The other one is Indiabulls Real Estate, wherein once the company sold that London asset to the promoters, I think the stock has been okay, it's no longer on the upper circuit. It was at an upper circuit early morning trade as well, but currently still in the green. So two slightly difficult names, but trading in the green right now. Any thoughts out here, Yogesh? Would you be bullish here, either of the names?
Neeraj, I was bullish, but at this price, after a strong run up from 70 odd to 120 Edelweiss, but still there is a lot more room to go. And Indiabulls Real Estate, the buyback has been on an attractive side, and the stock was around 40 rupees on the all-time low. when we have seen a climax selling. And from there, the management has come and clarified everything about that. And now the price is high. I think Indiabulls real estate I would avoid clearly, but advice is something that the real estate picture in the new reforms which have been announced, and probably more reforms to come for the real estate, and probably that could turn out to be a boon for Edelweiss, where they have got stuck into the real estate business. Insurance business and other businesses are doing very well. Though this result this time Q2 is not comparable and was not that encouraging at all, but yet the stock is showing some different story. I think around 122 or around 120 level, one can still add this Edelweiss and wait for 1.5 year or maybe 2 years down the line, and may see some more fireworks there.
Okay, Yogesh, before we thank you, pick one, HDFC, AMC or RNAM at current levels.
Still the valuation gap between the position number 1 and 2 is still expanding more and more. Last time when we spoke, it was around 3,200 or 3,300, and today it is 3,500 plus. I think one should have both, that one is the leader and second run player to have a better portfolio returns. I would say both are doing very well, though it is expensive, but will remain expensive. And the third stock, if I may mention, that would be HDFC Life and Bajaj Finserv. I think insurance has a lot more room to go for next 3 years. So whenever I will be there, wherever I will be there, I will still recommend AMC companies and the insurance companies for strong returns for the investors.
And HDFC AMC at the current price?
Yeah, and Neeraj, even if somebody is not holding any shares, they can start deploying and allocating 10-20% right now.
Okay, wish you all the best for that. Well, let's hope, Yogesh, in the past these calls have worked very well. It's just that the current point of time, a lot of people question the risk reward, but you never know. There's money flowing to quality, and therefore that might well continue. Thanks a lot, Yogesh, though, for joining in today, and keep up the good work. Some of your calls have worked very, very well. Before we start wrapping up the markets, question each to both our experts. Navneet, HDFC AMC is up 8.5% now. 3624. This is just unreal, the kind of gains that we're seeing here. I remember went to 1300 at that point of time. Everybody said, oh, it was anyways expensive, and therefore going down to 1300 is not bad. From there, the stock is up nearly, 3x.
That's right. You know what? People who would have invested in their mutual funds vis-a-vis the stock, I think the stock would have given better returns than their mutual funds. Nevertheless, the AMC space has been doing pretty well, and for the markets, it's going to be a cut of about 70 to 75 points right now. Just want to pull up Chalet Hotels. I think that's gone up in the last 5 to 10 minutes of trade. It's seen gains of about 13 to 14%. Yep. So there is some buying interest which has come in the last 10 to 15 minutes. Ruchit, you want to come in here on the charts? Is it indicating anything? Volumes are decent?
Yes, there is a breakout from a consolidation phase. 355 was the resistance area. But frankly, if you look at volumes on a daily basis, the volumes are quite low. Yes, today the volumes are decent, but if you see on a daily basis, the volumes are just around 2 to 3,000. So it's a low volume counter. But yes, in price action, there is a breakout today. 355 was the breakout level, and in case if we get any dip towards 355, that could act as a support. And on the higher side, the range target projections are coming around 400. So we could see levels of 400 in near term.
Look at the moves, Navneet. By the way, RNAM suddenly got a lease of life. I think just looking at the rally in HDFC Asset Management, RNAM 2 is up about 11%. It was flat when the day started, and it's gained 11% intraday. I wonder if Motilal Oswal or IIFL Wealth or some of the others too have done a similar move. No, nothing for MOSL, and IIFL Wealth should come up on your screen. Let's just see if that is doing that. No, nothing. So it's just those two pure play asset managers. And lastly, EID Parry is up 19.5%, 194. A lot of value buying there. A lot of old school investors have gotten into in the last 1 quarter, up about 19%. Very quick thoughts, Manav, here on EID Parry.
We have already seen a good momentum coming into a lot of these stocks recently, but EID Parry specifically, has been in a very long structured down move. After a good sideways consolidation, there has been a breakout today. We need to see some more follow-on move or a sustained support zone which has been held. So for the near term now, the new support zone for the stock would be at 180 to 185, and we have seen in the past that post such a breakout, the prices usually consolidates or drifts lower again. So 180 would be the levels to look out for. In case if these support levels are held for next couple of trading sessions, we would still review it and take a bullish stance, but for now it's an avoid.
Okay, Chairman, stay on. We'll take in closing thoughts from you. Market's not ending in ship shape. About 567 points down for the Nifty Bank. It had a big move intraday on Monday's session and gives off some of those gains in a big way in today's trade. The bigger news is the currency, yes, but the market, equity markets is what we end with. Very quickly, the mid cap and the small cap, and then I quickly go across and try and tell you what's happened in the large cap arena. Down about 1% for the small cap index as well. Let's see what's moving and what's not. Britannia, 5% higher in trade. TCS about 3.5%. Reliance 2.5 or 3%. Those two have done the balancing act today, really, or at least tried to. Nestle, Finserv, HUL, very, very flat moves. The losers, a clutch of banking names led by Yes Bank, down about 6%. There is weakness in Z Entertainment today after the gains in Monday's session. Result reaction for Adani Port, then SBI, other name, Axis Bank, another name, IndusInd Bank, another name. So a clutch of these banking names, non-Kotak, non-HDFC, which have fallen very, very strongly in the session today and not looking all that great currently. Banks, the principal culprit. Now, what about the broader end of the spectrum? Pain there too, I reckon.
That's right, Neeraj. But let me begin with companies from the HDFC stable which don't disappoint you even in a weak market like today. So HDFC AMC and HDFC Life, both of them gaining significantly today. AMC closing at day's high with gains of nearly 9%, and HDFC Life also closing with gains of 3 to 3.5%. EID Parry, we were just talking about it a while back, locked in upper circuit gains of 20%. AU Small Finance Bank in the second half saw some buying interest, and this counter is closing with gains of 12 to 13%. The volumes are also on the higher side, and these are all-time high levels for this stock. TVS Motors from the auto pack managed to close in the green, 3% higher there. Amara Raja Battery, the long positions continue even after 10% rise that we saw on Monday, and the stock's closing with gains of 2%. And Raymond, remember the auction that we just told you, despite of a weak market, of course, you could not see more of selling pressure coming by because there was a parallel market where auction was taking place for short sellers. On the losing side, Sun TV, on back of weak set of numbers for the September quarter, market share falling for this media company. Heavy short position seen on the future side, and the stock corrected about 11%. You also had something like Dhampur Sugar where selling pressure came by. The stock is closing with cuts of nearly 9 to 9.5%. HPCL also didn't have a good trading day. The stock fell about nearly 2% towards the closing. I think there was some recovery from the lower levels. And Bank of Baroda from the PSU banking space was down 3 to 3.5%. Your high beta stocks from the likes of Indiabulls Housing Finance, of course, in a weak market like today's, they too succumb to selling pressure. And this one's closing with cuts of about 8 to 8.5%. And talking about the broader markets, let's quickly take a look at how the market breadth today panned out, and won't be surprised if it's in favor of the declines. That's for entire listed universe for you, and really the ratio is almost 1:2, Neeraj.
Yeah, and it's ended at the worst point of the session, which is quite disappointing, really. Similarly for the Bank Nifty to ending in the worst point of the session. The turnover should come up. Penultimate day to the weekly options expiry, likely that it would have inched up a bit on both counts.
Yep.
At this day, normally it's par for the course. Every Wednesday, usually seeing these volumes now.
Yeah, just the cash turnover has moved higher compared to Mondays, but I guess off late we've been seeing that figure of about between 35,000 to 40,000. Let's quickly take a look at the contributors list before we get your closing thoughts. And as we were highlighting, Reliance and TCS, had it not been for these two stocks, we would have seen sharper cuts coming in today's trading session. And dragging the index lower were your heavyweights like ICICI Bank, ITC alongside Infosys.
Yeah, it's not look all that great. Final thoughts from our experts. Based on the fall today, Manav, what levels does this cut open up some fresh downsides for the Bank Nifty in the very short term?
Yes, in fact, there has been a strong reversal on the daily chart on the Bank Nifty, and there was a significant amount of open interest added at the calls. We witnessed 31,000 calls, also witnessed a good amount of open interest addition. So I sense for the near term that would be the important resistance to look out for. But on the lower side, we have the support which is close to 300 to 400 points lower, and there is important put writers which also stand at 30,100. So this is the broader range that the markets would be trading in. I sense we will continue to witness choppy sessions, but with the breakdown today on the daily charts, this choppy session could witness a few legs of decline on the lower side, which could be more or less corrective in nature. For the Nifty, 11,750 would be the next supports to look at.
Okay, and interesting data points as Manav was also highlighting. You did see intraday unwinding coming in for 11,900 put. When we started the show, it had added about 10 to 11 lakh shares. Towards closing, it shed 5.5 lakh shares. So clearly put writers ran for cover. In last 1.5 hours, you did see shedding of nearly 20 lakh shares coming thereby. Ruchit, closing thoughts from you. 11,840, are we headed lower from here?
Well, if I look at last 9 trading sessions, then 11,843 was the low, so which was a crucial support. We have closed almost around that support level, a tad below that. So tomorrow's opening would be much more crucial for next 1 or 2 trading sessions. And in case if we see any kind of a bit of follow-up selling in tomorrow's opening session below this 11,840, then the Nifty could test its 20 days exponential moving average, which is placed around 11,750.
Okay, on that note, would like to thank both our experts, Manav and Ruchit. Thanks a lot for joining us today and taking us through the technical views on markets as well individual stocks. And with that, it's a wrap on this edition of Countdown. Goodbye from Neeraj, my side, and the entire team who put this show together. Stay tuned. Coming up next is Market Wrap.